That's not the case for other L2s. Like Optimism doesn't have fraud proofs. That's not an L2. Like if you don't have fraud proofs, you're not an L2. Full stop.
All right, before we jump in, we have a quick deal on DAS tickets. It is Black Friday, aka BlackRock Friday. We are running a promo, £200 off of a 4-pack of tickets. Today, the price is about £1,800. Final price after this discount, BlackRock Empire is the code. BlackRock Empire gets you £200 off, which is £1,600. Also, if you book your ticket using BlackRock Empire, you get a free Blockworks t-shirt. That's right, a free Blockworks t-shirt for the first 24 people who use the promo code. So get it fast, BlackRock Friday. You can go to Blockworks' site, blockworks.com/DAS. Let's get into the show. This episode is brought to you by the Chronicle Protocol, a cost-efficient, transparent, and decentralized oracle. Chronicle has developed a next-generation oracle primitive called Scribe, which reduces oracle gas fees on L1s and L2s by over 60%. You'll hear more about Chronicle later in the show. This episode is brought to you by Northstake, the secure and compliant staking platform for institutional investors. Northstake's ETH staking service lets institutions earn staking rewards while maintaining maximum flexibility on all of their capital. You can learn more about Northstake's institutional staking services by clicking the link in the show notes or that QR code that is on your screen right now if you're on YouTube. Now, let's get into the show.
Are you your parents now?
No, I'm at my in-laws today. There's a chance they can hear us recording, so we will say only.
Fantastic.
Obviously,
They know you're in crypto, right? It's not gonna be a weird Thanksgiving where like people.
I was here. I spent COVID here, which was I will tell you, 2020 for Blockworks were some dark days. Our revenue fell. We're an events business, right? So our revenue fell 80%, literally overnight when the New York shut down conferences, and then the world shut down, and they saw all of that go down. So yeah, they know I'm in crypto.
They know. Very good.
Yeah.
It's good to know that at least. There's no surprises.
You seem like you're in a good mood.
I mean, like what's not to like? I mean, it would be disingenuous for me to say that like, you know, bull markets are always way more fun. I don't understand these people that say like let's go back to a bear market. I'm like, no, you clearly don't understand how bear markets feel, and they make you question your existence. And you know, it's good. You know, there's some really positive developments that we're going to talk about here beyond price. You know, the Binance action, some developments with Coinbase, some new projects launching. You know, again, you know, we've been doing this consistently every week, at least once a week, and you know, it's always a bit more fun when you know you're not questioning that
everything is better when numbers go up. So
absolutely.
Here's what I want to talk about. The two big things are Blast and Binance. Blast is the L2 that Pac-Man, the founder of Blur, launched, and that I'm not even really sure if it's a spin out or a separate company, but we can talk about that.
Separate company.
And then Binance, you know, one of the biggest actually news announcement I would say of the year in crypto. It doesn't feel like maybe that big of a deal because I think a lot of people who are native to like crypto native kind of saw this coming potentially, or knew something was happening here over the last couple of months, but nonetheless still huge news for the industry. It has a lot of second order implications. So Binance and Bullish, or Binance and Blast are the two big things. There's some other stuff like Kraken, SEC sued Kraken again. Pith launched their token. I think Pith is a really interesting project. We're actually going to have the founder of Pith on the show. Coindesk got acquired, so that was also an interesting thing. But I think those three things pale in comparison to both Binance and Blast. So you want to start with Binance?
Sure. Yeah. Take it away.
Let's start there. So this week, Binance agreed. Two big things with Binance. One is that Binance agreed to plead guilty in a criminal charge related to knowingly violating the Bank Secrecy Act. They're paying more than $4.3 billion as part of the settlement agreement. This is the largest penalty in U.S. Treasury history. If you break that down, I tried to find like how that $4.3 billion breaks down. The only thing I could find was $3.4 billion of it is a civil monetary penalty to FinCEN, which is the Financial Crimes Bureau within the Treasury. And that agreement comes with a 5-year monitorship, which I think actually is important. 5-year monitorship and various agreements to kind of like bone up their compliance and ensure that the company completely exits the US. the reason I say that part's important is I think what that 5-year monitoring means is that they actually are going to get for 5 years like logs to everything that Binance does and all that kind of stuff. Which that's I do wonder if this will have some second order implications for companies who have done business with Binance in the past.
Mhm.
And then the other part of the fine is they're paying us $968 million fine to OFAC, the Office of Foreign Assets
Mhm.
Control. So that's the one
Yeah.
big bucket is this
I,
$4.3 billion fine.
it entails no involvement in Binance operations for this is for CZ. CZ needs to step down. He has already. He is paying a $50 million personal fine. And then there's a sentencing date in March, I think, February or March. But he effectively pleaded guilty. As part of that, he's stepping down and paying 50 million. He can't be involved in Binance for 3 years. The question now remains: is he going to serve some like jail time, or is it going to be like Arthur, right, where it's just like house arrest for like 18 months or so?
Right.
I would think it's more like Arthur's type of sentencing, because again, they also face like these very similar kind of issues, right? Like anti money laundering and OFAC and whatnot.
Yeah.
Um, Binance
You're talking
is
about the
fine.
1.8, the 1.8 and the 2.5 numbers.
Yeah, yeah. Binance was fined 1.8. Um, that was a discount for partial cooperation,
Yeah.
and that is paid over 15 months. And then the other component of the 4.3 is a 2.5 billion for sanctions. Like I think they just facilitated like money flowing into certain, sanctioned
Specifically,
countries.
Iran, I think was
Iran.
the
Yeah, Iran was the biggest one. Which, by the way, Arthur, what was it? Uh, also faced a similar issue with Iran, right?
Yeah. So I think there's a couple angles that are interesting here. So 4.3 billion that they owe. That's the biggest penalty in U.S. Treasury history. CZ steps down, and then also CZ got hit with $50 million in personal fines credited to the CFTC. Couple
Mhm.
interesting maybe ways that we could go with this, which is one, conversation about the markets. Is this good or bad for crypto? So that's maybe where we could start. Other things are just like second order implications.
Mhm.
Also, what this does for Coinbase and other exchanges.
Yeah,
But
yeah.
maybe we can start with the markets. Like, what do you think when you saw this happen? Um, what do you think in terms of like bullish, bearish, neutral was kind of priced in? Like, how do you think about this in relationship to kind of this cycle that's kicking off? And is this good or bad for the industry?
My first reaction was immensely bullish. Like you just climb a huge wall of worry. Like there were people that were speculating Binance. Like it was just unclear, right? The impact that it would have. I mean, Binance is the most important company in crypto. It has been. Like it served a huge impact for retail adoption, for projects listing, like the liquidity. Like it was just.
They
It
started.
is
Remember
still.
the market they I mean the fall 2019 market, which was a bull. There was that mini bull market inside the bear. That was a bull market specifically on the back of the Binance IEO program.
IOs. Yeah,
They
yeah.
literally had the
You
ability to move a whole market there.
Yeah, like I went to the Binance conference, one of their first in Singapore, met CC. He was super approachable. Like this was
Yeah.
pre IO. My big thesis then was like longing exchange coins was a great bet in a market that is volatile but choppy because exchanges profit in that type of environment. Um, but anyways, the news I think is immensely positive for a couple of reasons. Of course, there's this wall of worry that we constantly have in crypto, and now there's a lot of clarity. 4.3 billion is not um, it is a large sum of money. I think it's the seventh largest fine ever paid to the US government. I think it's the largest to the DOJ, I believe. So that like in context, like there's like the other people like in this category, in this league table are like Citigroup and HSBC, like the major banks, effectively. And then there's Binance as number seven, which is super impressive. Like this, I mean, there's speculation of how profitable Binance has been, but like in the order of like hundreds of billions or so, like 100 billion or so. And so, anyways, there was a couple of immediately the market reacted negatively. Now today, 24 hours later, the market is actually, uh, you know, in the green and pumping pretty hard. There was some outflow of Binance. I think it was like one north of a billion of outflows, 1.4 billion as a couple hours into the announcement. Naturally, some people were worried or whatnot. Um, and so I think it's very positive. for the space. That it also is positive because immediately after, like, there was Brian Armstrong went on Bloomberg and also had a good tweet of like, "Hey, we've taken the long road approach here. Like, it was been very difficult at times because we were in the U.S. We tried, like, we've complied. We haven't taken the fast route, like as the DOJ kind of press release said, we haven't gone through this approach of, move fast, like ask for forgiveness instead of permission, which was the kind of the Binance approach as they
Yeah.
framed it. And Coinbase was like, we've always asked for permission first. And full disclosure, I'm very long Coinbase
Did,
stock.
did you buy more Coinbase after you saw what happened to Binance?
Yeah, yesterday and today. I've just been very like I woke up today to an announcement of Coinbase that they were launching loans for institutional clients. And I tweeted about it today. I just think that Coinbase sees this incredible opportunity to be really the dominant player. Um, not just in the US, but like in crypto full stop, and take a lot of the market share from fallen angels, from Genesis no longer around. So now they've stepped in, and I think they're going to fill that gap of like facilitating a lot of loans and market making. Um, along with Galaxy, but I think Coinbase in particular is
Well, yeah,
is
they're launching international perps too.
they
Um,
launch international perps. So that was a big revenue driver for Coinbase and sorry for
for
Binance and other
Binance. Yeah.
exchanges. They've expanded internationally. They've been very vocal in their presence in the UK and other jurisdictions, and they've gotten licenses to serve these jurisdictions more easily. They've also obviously launched their L2, which is kind of the curated experience for users, 100 million plus, to enter into Web3. And I think if they're ever going to do that, they're probably going to enter it through Coinbase. And I don't think the market fully appreciates the revenue potential and opportunities, not only from a customer retention and acquisition standpoint, because all of a sudden your product, the suite of products that you offer, just becomes more compelling, but also the monetization of said customers just has increased pretty dramatically. And I think the market is very critical of the stock and continues to be critical in the sense of, hey, spreads are going down, right? Revenue fees are going down. Obviously, in a bear market, trading volume goes down, but also the percentage fee that Coinbase has taken historically has been pretty fat, pretty high, and that over time goes down, right, with through competition. No different than like the stock brokerage firms went through this kind of transition too. You remember when like Robinhood and Wealthfront launched, they were saying like zero commission trades. Everyone freaked out because like, oh my god, the Schwabs of the world are going to go out of business. They didn't. They just found other ways to monetize.
Yeah.
Um, and I think that's a similar transition the market is just going to wake up to in Coinbase's incredible revenue generation, and not to mention USDC. For the first time ever, they broke down the profitability of how much they're making actually on
Right.
a lot of customers hold the stablecoin called USDC. They're buying treasuries. They're earning some net interest on that, which they're sharing some to customers, but they're taking some as well. And so all that combined is just anyways my thesis for coin. I mean, none of this is financial
Yeah, yeah. All
or
right.
any
So,
of
so,
that. It's just
so takeaway number one, like, by the way, I agree with you. Long Coinbase. That's takeaway number one. And by the way, Coinbase, I was looking at the revenue numbers. 2018, 520 million. 2019, roughly the same. I think it was like 480. 2020, 1.1 billion, past a billion in revenue for the first time. Fast forward 2 years, 2022, 3 billion in revenue. This year, it's expected they'll do around the same, probably a little less than 3 billion. I think it's a coiled spring, but we'll see. I don't want to just come on here and pump Coinbase. So that's the first thing. Takeaway is good for Coinbase. Second takeaway I would have is when you talk to people about the last remaining buckets of FUD in the industry, it was Binance and Tether. Those were the two things. And
Yeah.
I think it's like you've basically heard this you've been in crypto for a while, a little longer than I have. Like you've heard this story before, which is crypto can't survive without insert thing, right? Whether it's Mt. Gox
Yeah.
or BitMEX or FTX or Binance. And I think Matt Hogan said it well. He's like, what people miss is that crypto is incredibly anti-fragile, right? And it's much bigger than any one trading venue. So
Mm.
I'm looking at the numbers here. Binance has roughly 60% of the total liquidity in crypto. And I don't know. I think it's crypto is much more anti-fragile than anyone
Yeah. I
realizes.
mean, look,
So,
to be fair, Binance will continue to operate.
yeah, I saw people
Um,
making comparisons to FTX, by the way, and I think it's just good to. These are two completely different situations here.
I mean, one of them didn't misappropriate customer funds,
These
which
aren't
was the
even
biggest
comparable. These aren't even comparable. Yeah,
yeah, let's be very clear here. The issues and the fines are related to Binance's um, Binance facilitating trade and flows in and out of sanctioned countries in the same way that BitMEX did.
right.
Um, it was not related to like being insolvent or any of that nature, which is what FTX did. Right, that's fraudulent activity.
Yeah,
Now CZ's pleading guilty to that. He said, "Look, we're a young company, whatever. Like we should have done better. We had better, should have had better compliance policies in
yeah.
place. Yada yada yada." There's some implications to that. Um, But it's night and day, right? It would
I
have
think
been
it's
way, way
amazing.
worse
Yeah,
if there was insolvent the biggest concern was and look, Binance, the biggest concern was, proof of reserves.
it
Do
was
they
two
have
things. It was that was the absolute worst was proof of reserves. The second worst was a full Binance shutdown. There was basically
Yeah, yeah.
four things that I think people were considering: slap on the wrist, kind of like this like neutral thing where nothing really happens, a Binance shutdown, and then lack of proof of reserves like an FTX situation. And this basically just, uh, I think the last one would have been catastrophic to crypto. The full Binance shutdown probably would have been market nukes by like 40, 50%. This kind of like limbo phase would have been, I don't know, just kind of like where we're at right now. And what we just got was, I think it was Jonah from Cumberland or ex Cumberland said, he's like, look, this is a slap on the wrist. Slap on the wrist is a buy everything type of moment.
Mhm.
So people outside the industry, I think I got a email from my uncle saying, see, this guy's going to jail. What's probably horrible for crypto. And I think that's kind of the take from outsiders that this is another FTX
Yeah, yeah.
moment, another criminal running a big thing. And to people inside of the industry, it's very exciting. It's a big de-risking moment, I think.
And for context, Binance has been producing proof of reserves for quite a while now. Of course during I think it was the proof of reserves of Binance went live in November of 2022. People took object in the way they were managing that and whatnot, but they were producing proof of reserves for a while now, and that's not the case for certainly wasn't the case for FTX. And so there have been limitations. They've been improving the proof of reserves, the way they reported that. In February 2023, for context, they did a major upgrade. The developers implemented CK Snark protocols um, on top of the core Merkle tree. Look, I don't want to get into all the mechanics, but it's like an audit, right? There are a lot of components to a proof of
Yeah,
when
the
you show
wallet's
proof of
control. You can
reserves.
see the wallet's control about $65 billion worth of funds. I think this is a non conversation. Even I don't even. I
Yeah,
don't.
and the issue was, of course, during these moments of walls of worry, not just in crypto, of panic, as Howard Marks likes to say, pendulums swing to extremes, whereas the
Yeah,
actual reality of things, they're never that extreme. Of course, there's fat tail events that can be catastrophic and destabilizing, like a global financial crisis or whatever, where the wisdom of the crowd just gets it wrong, like a hurricane, something like that. But for the most part, I think the market went from total euphoria to total skepticism, and everything is FTX. And a lot of people, atoms of the world, just went on this ramp, just went on this, they were traumatized by FTX because they were super bullish FTX, and they were caught up, oh shit, maybe I should have been a little bit more cautious. And then everything looks like FTX, and that's we should just kind of be more
yeah,
calm and objective.
yeah,
Um, and was it priced in? No. There's always in crypto some crippling fear, right? Because trauma is real for crypto OGs or anyone that's been here for a while. It's very hard to work through trauma and move past it. It will be very paralyzing.
yeah,
There are so many things that are overlooked in bear markets as they are in bull markets because of these traumatic moments. You're just you're in fear, or you're operating from a place of, you of course don't want to make the same mistakes, but I think that could be a bit paralyzing.
Yeah.
Now that's a topic for a totally separate podcast, which sort of dovetails into what we were talking about in the prior episode of like how we position our portfolio, how you think about narratives that are being overlooked. I think there's so many of them. We're going to have Robbie from Immutable to talk about gaming, which I've talked about extensively here. But stuff like that, you had play to earn, people, actually, and so many other projects went through that kind of hype cycle. They're now in despair, and people are totally discrediting gaming. It's like, it's not going to work, guys. I'm like, okay, is it really not going to work? Like, so, anyways, that's just a market in total trauma mode, and it has been for quite some months. And so this news announcement, I think, is really impactful to kind of move past that trauma. And more importantly, one of the things that Brian said in his interview, and I think it was on Bloomberg, he said it now places a lot of emphasis on rulemaking. Let's actually have clarity. And I think there's been
Yeah.
a lot of progress during the past year and a half or so. But now that we have these big fine events, it's like, all right, let's actually go back to the more important matter at hand and craft rules, very clear rules and regulations so that it allows, folks like Coinbase and Binance to operate, you know, within the law. And I think that's going to be the major theme over the next year or so, right? Of
Yeah.
course, there's elections coming up, but I think that's really now. I think now regulators look, they brought enforcement action against Kraken, which is a bit of noise, and they keep punting and delaying resolution on the Coinbase front and on the ETF stuff. But they're kind of running out of like excuses not to provide clarity to an industry that time and time again, it's like, okay, maybe we didn't operate within the lines. We paid this huge fines. Okay, but like the intent is very positive, even from players like Binance. It's like, all right, we want to do right. We believe in the technology. Let's just like get to a place where we have clear rules, right?
Yeah. Now, the only downside that I could see from a lot of this is that SEC is clearly getting weaker and weaker. They keep losing these cases. They kind of went after this like what I would say a foolish Kraken case after they already settled with Kraken earlier in the year. However, I think it was Yellen said, or the other person who spoke, the DOJ guy, I forget who that was, but said if you are operating a DeFi company, and I don't know if you watched that talk, but it feels like they're kind of signaling what they're coming after next, and it does feel like as the SEC gets weaker, potentially the DOJ is getting stronger here, or coming after crypto a bit more, and I would have to
Mhm.
imagine that. Um, so they've gained access to a lot of the code from Binance and a lot of the messages and 100% of the logs. The only explanation for that, and if you what you said in the very beginning of the show, which is he complied, so the dollar amount was lower. CZ negotiated this treaty. I would say it's probably pretty likely the DOJ. This is the first of a couple of DOJ things that they start
Yeah,
bringing on companies, and that's probably the downside of this.
yeah, like any sort of type of bad actors that have sent funds to Binance or whatever, and maybe that allows intelligence units to, or like DOJ to work on probably enforcement actions or cases they have open, but they haven't really gotten full resolution. But now that a lot of flow has gone through Binance, and so now it's folks like even like Zach, right? He flags, hey, like these addresses, people buy these addresses and KYC addresses, and then sometimes you know I think that now that they have this data
Yeah,
historically, I think it may be easier for them to build the cases, which I think is a good thing. Like, if you've been doing shady or fraudulent stuff and you've been working with an exchange, good luck. Like, those are I have no problem with that. That's very positive for the space. I don't fully appreciate the DeFi stuff. I'm refreshing my memory on the pod, the latest regulatory pod with Rebecca and Jake, and I saw Rebecca recently in person. Um, there have been proposed pieces of legislation that are could be very damning for DeFi, like the traveling rule and some of the stuff that would make it almost impossible to interact in DeFi and pools of liquidity if not everyone's
yeah,
KYC'd and whatever. Like, I just want to remind people, like, we hear this, but like, it, an agency, my understanding is an agency might have an opinion, a particular, but that doesn't mean it's law. And until it's law and
no, it
passed
goes
into
to the courts.
legislation, It could be like there's a heavy commenting period for a lot of these new bills that are, crafting regulation for the different pieces of crypto. Of course, DeFi is important in some of these bills, but these bills haven't been like passed. And there's a people should go listen to that episode because it is super important. If you're listening, if you're running DeFi protocol, if you're a fan of DeFi, interestingly, CZ said that he wants to spend more time like looking at DeFi
No, I saw
protocol, which
that.
is
Yeah.
great. And if you're wondering, like there's a great way to get involved, right? And comment on these bills because they're not perfect by any stretch of the imagination. Like they miss the mark on so many things, like the stablecoin bill and some of these other bills. So yeah, like time and time again, they bring DeFi into the limelight of like, hey, especially like the CFTC or the SEC, right? Because it's they're
Yeah.
treading on like closer to there's clear regulations for like financial firms, right? But the biggest thing, like for instance, when FTX went down, everyone was like, this is why we need to shut down DeFi. I'm like, well, no, like I think they peeled it back a bit, and the rhetoric was peeled back as well in the sense that like DeFi is not FTX. In fact, if FTX were operating as a true DeFi protocol, it would never happen. Aave
Right.
hasn't been insolvent. Like there's, insurance funds that may be impacted if there's bad debt, but it's all on chain. It's all transparent. So, anyways, a long ramble, but I'm not surprised that they make those comments. Um, we have to also appreciate we're going into an election year, and during election years, politicians always want to, they're looking out for themselves, right? And they want to make headlines, and crypto is a great opportunity and has been for people to make headlines.
Yep.
That doesn't mean it's the law. That doesn't mean it's the interpretation of the court. And that doesn't mean it's the sentiment of the overall government. So I'm just going to say that because it's important, right? When we hear these headlines, like the New York Times of the world is always going to report and always take the most negative spin as they have been doing on things,
That's what my
not
uncle
just
said. My uncle
related
said,
to
"I read the
crypto.
New York Times thing.
Yeah,
Sounds
yeah,
like
yeah.
there's criminals going to jail. And by the way, what is a crypto
Yeah,
exchange?"
yeah.
So,
Yeah, but meanwhile, they're taking the softest stance on the whole Israel Gaza situation. No, yeah, no, no. Let's not like report with the true veracity, there, right? It's just a bunch of idiots.
um, speaking of, I don't know, I was going to try to use a bunch of idiots and pivot into Blast.
Oh, yeah, yeah.
Yeah, but Joseph told me I messed up our ad read for the Digital Asset Summit, so
Did you really?
I have to do it live, which is that it's Black Friday when you're listening to this, and we have Black Rock Friday at Blockworks here. Instead of Black Friday, we got Black Rock Friday, so you can get 20% off 4 packs of DAS tickets. People were reaching out to us saying, "Hey, we want to buy tickets for our whole team," so we launched these things called 4 packs, and if you go, I think the code is BlackRock Empire on the DAS page. So if you enter BlackRock Empire, you will get 20% off.
Is that because BlackRock is sponsoring it, or
We got an announcement coming soon. You'll see.
I mean, I guess it's related to BlackRock.
I,
Great.
I
No,
plead the fifth on that one. I just read what Joseph tells me to read, man. I don't have
Joseph is our
a.
producer. He's a great guy.
He's a
Thank
great
you,
guy.
Joseph, for everything that you
Yeah,
do.
we
All
we've had some
right,
good.
yeah. Well, London, it's gonna be great.
Yeah,
I'm planning
it
on being
is.
there.
It is. It's gonna be great. Let's talk about Blast. Why don't
Yeah,
I tee up the Blast conversation?
please
By
do. And I'm just gonna say, I'm biased here, folks. I'm an investor. I was an early seed investor in Blur. I also invested in Blast. So
I
everything that
mean,
I say
go to
here
the
has
Blast website and your face is on the homepage.
a,
So,
is it? Well, I can
so
tell this. I can tell the story how this came together, um, we're gonna have Pac-Man. We had him very early on when he was building Blur. We're gonna have him on again. He is catching up on sleep, but he'll come on soon.
yeah, great. All right, why don't I tee up this conversation from an outsider's point of view and just what I saw on Twitter and stuff like that, and then I'd love to hear the backstory of this. So Blast is an L2 created by Blur and by Pac-Man, who's also the founder of Blur. If you guys remember, Blur was a NFT marketplace that challenged some of the ideas of what it looks like to trade NFTs, took on OpenSea, gained a lot of volume and market share relative to OpenSea maybe a year ago, a little more than a year ago. So Pac-Man said, I came out with this tweet the other day, said, look, I can just read it directly. It says, uh, basically Blur wanted to build on L2. There wasn't a good L2 that they could find that had some of the things that they wanted. Specifically, that thing was native yield on the chain. So he said, look, if it doesn't exist, I can go build it. So the basic premise behind Blast is that they're offering native yield on assets like ETH and stable coins. And I think what this means is they're basically doing two things. One is they're participating in ETH staking. Any assets, any ETH that's been bridged over to Blast, basically gets a yield. And they're doing this in two ways. They participate in ETH staking, and two, they're sending stable coins to protocols like Maker, right, to bring that T-bill yield on chain again via folks like Maker, which is then passed through to users of users of the Blast L2. And for folks who really criticize this on Twitter, this idea of like an L2 with native yield, I think it's important to just look at the amount of capital that's sitting on L2s without any yield, right? So if you look at something like, so when you bridge ETH, for example, to another L2, you send ETH to a bridging contract, and it kind of mints ETH, kind of like a receipt token on the L2. However, all that ETH is typically not staked, right? For example, the Arbitrum bridge has about, last time I looked, two and a half or $3 billion of ETH sitting there. So if you let's say we use that $2.5 billion number, if all that ETH were staked, earning 4%, that means that Arbitrum and or Arbitrum's users, depending on how they want to allocate it, would be earning an extra $100 million in ETH per year. So I think that's basically the thesis, is that, and we've seen this before too with Gnosis. So Gnosis launched their own chain. They stake all of the DAI, and that earns 5%. And as a result, like DAI stakers on Gnosis earn this like 5 or 6 or 7% yield. So if you assume that maybe $100 million of stables are bridged over to Blast, let's call it 50 million gets staked, the rest is sitting in wallets or maybe used in DeFi. If 100 million is earning 5%, or let's say 50 million is earning 5%, you're looking at a $2.5 million that's going back to either the Blast protocol or to users. So that's the high level overview that I would say. But maybe give me the and we can talk about the reaction, which was both. I saw some very positive reactions, very negative reactions as well. Been about 40 or 50 million dollars of liquidity that's been bridged over already. But what's the backstory here? How did Pac-Man approach investors? Like, as much as you're open to sharing here, Santi.
Yeah. So for context, my first interaction with the Blast team was like, I didn't know it was Pac-Man. It was sort of, I was introduced by a good friend of mine who actually brought me Blur. And so again, she has a good relationship with Pac-Man. And so she's like, hey, you ought to talk to, I know you invest in infrastructure. You just got to take a look at this L2. My first reaction was, do we need another L2? And I had a long discussion with Pac-Man at the time. Like, I didn't know it was him on the other side. Then, of course, I knew later on, but
You had a call
uh,
with someone, and they were
like, so it was
anonymous.
like he went by pseudo. I was like, okay, well, fine. I'm going to take the call. So I took the call, and I was like, my first question is, like, I'm just going to stop you. Why do we need another L2? And I'm an investor in others, L1s and L2s. And so he's like, well, because none of them have like native yield. And I said, like, can you unpack that? No pun intended. And he went through like what you just referenced, right? I was like, well, how easy? Like, one, why have current L2s not done this? And how easy is it would be for them to kind of just adopt this standard? And they're like, well, they kind of have to re-architect it because a lot of these L2s have been in development for a long time. It's like, all right, fair. Um, and and so of course then, and we'll reference the tweet. The idea to do Blast really starts to make sense when you understand that they face these challenges when building Blur. And again, for context, like a lot of people deposit ETH into these pools, kind of waiting for some sort of event where they can at some point swap for NFTs, but they're earning some yield, they're earning some points. They're it's an incentivized pool, if you will. these kind of blur seasons, but they're not earning like native ETH yield by staking it on Lido, for instance, or some other, LST, and they're not earning yield on stable coins. And so I think that alone is a very compelling value prop. And one of the things that I've always been impressed by Pac-Man is he's one of those founders that, like every good founder, has very one-liner to crystallize exactly why they're doing. When we had him on early on, he said traders need a dedicated venue to, like, active traders need a dedicated venue to trade NFTs, and that's not OpenSea, and I'm going to build that for them. And he was just very focused on that, right? Which I think is a hallmark of a great founder. And in this case, I think this L2 is directly informed by the experience that they've had and the challenges that they faced and the feedback that they've gotten from the customers, which, by the way, they've gotten a lot of traction. Um, and Blur, in my opinion, and I'm biased, of course, because I'm also an investor, it is the dominant NFT like marketplace and venue, especially for traders. Like, and so, yeah, I think that they're so that I don't know if you want to dig more into that. I participate in the round. I plan to help them as much as I can. Of course,
I have a question on the round here. So when I was reading it, it said, I originally thought that they raised $20 million from like Paradigm and Standard, but then it said they raised 20 million. Contributors of Blast have raised 20 million from, and it seemed like they were kind of wording that carefully to say like it doesn't really mean Blast, but the contributors of Blast, and
I
like
think a lot of early investors in Blur ended up participating in the round. Of course, it was led by Paradigm and Standard.
was
You're
this a
right.
separate? Was this actually a separate round, or was this the money that Pac-Man raised for Blur also got included in Blast?
No, my understanding is this is no. So this is a separate like round for Blast,
Mm,
and it has a lot of the same investors in Blur, but also new investors. Of course,
mm,
Paradigm was an early backer of Blur, and now I think through their relationship with Pac-Man, led the
yeah.
round.
So this
Standard,
is
my understanding, was not involved in Blur early on.
yeah.
Maybe they've like, but anyways, it was those two funds, and then a whole host of like the Blur round was a lot of people active in NFT trading in the community. And in a similar manner, I think that he took a lot of the same playbook and invited a lot of people that participated in this round were people that have
They
known
had
him, he liked, and then
the
also
very native crypto, the
yeah,
very
yeah.
native. It was Hasaka and E-Girl, and I saw folks like Leshner were tweeting out. What is the? How did that go down? Was there a Telegram chat with just all the Blast investors, and he's like, all right, like 2 p.m. on a Monday, we're ripping this tweet out, or
I committed before, and then yeah, now joined like a group of all the investors just to coordinate, and stay on top of announcements and developments. And it's a lot of people I know, and so yeah.
All right, everyone. So we talk a lot about the institutions coming into crypto on Empire. Santi and I are both headed out to London March 18th to 20th for Blockworks' 8th ever Digital Asset Summit, DAS. This is an institutional buttoned up conference that we've hosted since 2019. I like to joke that it is probably the last remaining kind of suit and tie event in crypto. People are still wearing suit and tie. It's pretty funny, but you'll actually hear from a lot of the largest institutions in the world coming from Standard Charter, FIS, JP Morgan, Framework folks coming out, Wintermute, Van Eck, Goldman Sachs. There are a couple big themes of this conference. One, Bitcoin catalysts, the halving and the spot ETF. Two, a view from the buy side. Three, RWA's tokenization and stablecoins. Four, global regulatory frameworks. Five, institutional infrastructure, including banking and payments. And six, the macro case for crypto. If you have anything to do with the institutional side of crypto, you have to be there. Santi and I got your back. We hooked you up with a 20% off code. It is Empire20. There is a little competition running internally at Blockworks to see who can drive the most number of tickets. So help Santi and I out. Register with our code and you get 20% off. That is Empire20. This episode is brought to you by the Chronicle Protocol, a cost-efficient, transparent, and decentralized oracle that gives protocols verifiable on-chain data. For the frequent listeners of Empire, you know that we talk a lot about MakerDAO. Well, Chronicle Protocol is a novel oracle solution that has exclusively secured over 10 billion in assets for MakerDAO and its ecosystem since 2017. And for the first time ever, Chronicle's oracle services are now publicly available. Why should you use Chronicle? It's simple. Chronicle offers a 60% reduction in gas fees versus all of their leading counterparts. Also, super cool, they have unparalleled transparency when it comes to oracles. Chronicle offers a dashboard that allows anyone to track the genesis and trajectory of the data it provides. This is the first time ever that an oracle has made all of its data verifiable, setting a new standard for the accessibility of on-chain data. Endorsed by a network of the most revered validators, including Etherscan, Infura, Gitcoin, DYDX, and MakerDAO, Chronicle is the epitome of security and reliability in the oracle space. It's time for a paradigm shift in oracle development. You can learn more about Chronicle at chroniclelabs.org. Big thanks to Chronicle for sponsoring Empire. Today's episode is brought to you by Northstake, the secure and compliant staking platform for institutional investors. Northstake is purpose-built for institutions that want to enable the ability to move in and out of staked ETH seamlessly while controlling all aspects of their fund management. Northstake's tokenized ETH staking service offers institutions easy, low-risk crypto yield opportunities. It complies with both AML and MiCA regulations, making it possible for institutions to tap into Ethereum's growth and earn staking rewards even through these pretty turbulent regulatory times in crypto. If you are an institutional investor seeking compliant crypto exposure and yield, Northstake streamlines that all for you. To get started, head over to northstake.dk/tokenized-ETH-staking. I know you're probably not going to go to that long URL, so just click the link in the description of the episode. That'll take you right to Northstake's site, or if you're on YouTube, scan the QR code on your screen right now. Now, let's get back to the episode.
All right, can I run some of the pushback by you and you
Yeah,
tell
of course.
me? All right,
Like, it wasn't a perfect launch. And we can dissect that as much as we want,
well,
which I
I
think is
would
important.
actually argue it was a phenomenal launch.
Well, not perfect, I said.
Yeah,
Which nothing really is ever, but for all there's some reasons why it went very well, and there's some things that I think could have been improved.
there was a messaging problem, I think. I'm just going to read one of these users' tweets. They're very clearly aware of that, i.e., compare how they talked about ETH. ETH itself is natively rebasing versus stables, USDB, Blast auto rebasing stablecoin on their website. From the website, users transact in ETH. dApps are built around ETH. Blast was designed from the ground up so that ETH itself is natively rebasing on the L2. This is simply false. It is not ETH itself. It is something similar to Steth. And not making the distinction is reckless. So, what do you think about that idea that they're basically saying ETH is rebasing, but really it's not actually ETH here.
Yeah, look, they're working with Lido on the back end, right? Like they're the way it works is it's a one-way bridge at the moment. You deposit some ETH into the contract, and I think they very clearly said you're not going to have this ETH available until we launch, like in February. So that I think was clear. It was really the messaging that was where people took object, and it's fair criticism. I
The
think,
risk free messaging, or
yeah,
what
it
kind
was
of
really that. It was really that I think, you know, I just don't think you should ever use that word in crypto.
the word
Like,
risk free rate? Yeah.
yeah, like, there's just
I mean, I
but
will
like,
say it was good to see like people calling out. That was one of the things that hopefully one of the learnings as an industry of calling out what people perceive to be bad actors. And I'd rather have people perceive that something like this is bad and then have them execute and show them that they're not a bad actor. I think what people were really panicked about was um, what it sounds like is they're taking user funds and investing them, right? They're working with Lido on staking, but they're like taking basically user assets, investing them into T-bills, and they're calling it risk free. So that's not like T-bills are very low risk, but like there's still smart contract risk. There's a bunch of other risks.
yeah, of
So
course.
it's not really honest to call it a risk free rate.
Yeah, maybe look, wave a wand, do this again. You say, hey guys, look, this is the mechanism by which we're going to earn your yield,
Yeah.
and here are the risks. Here's how it works, and we're going to build. And here's you know, like just you could have been a bit more upfront. And this is a message for any protocol, right? I think more emphasis on that would have been appreciated, and I think that would have gone a long way. So, I think that the team realizes that, and one
Yeah.
of the things that, like with Blur, you never get these things 100% right, but I would have emphasized that a bit more versus like how the mechanism for earning points works, which look, I think is important, like incentivizing people to do that and whatnot. People are very quick to call it like a Ponzi pyramid scheme. I'm like, look, there's a difference between a Ponzi. Like, there's a difference between a pyramid scheme and a multi-level marketing, and this goes back to a fight that has happened not only in crypto but like Herbalife as an example. Like Ackman and I can enter
Icon
the
of a
chat,
second.
and
Yeah.
the difference, and I don't think so. So you know what the difference between MLM, multi-level marketing, and a pyramid scheme is?
I have a lot of experience with this. Yes, I do. I remember watching
Why
the
so?
story
This
for
is
another day, my friend. Story for another day.
oh
But
no, I'm gonna bookmark
there's
that.
actually a technical definition of it,
There
which is
is.
that yeah, for a pyramid scheme to be for something like Herbalife and Amway to be legal, a certain number of investors or a certain number of people actually have to be using the product. Um, actually have to use the product instead of just buying it to then flip on
Mhm.
someone else.
Correct.
So the reason why Amway is able to still exist is and Herbalife and all these folks is
People use the product.
enough
It's
people
a
actually
real
buy the
it's
product.
it's like
Or
a real product.
yeah,
Now,
exactly.
Ackman's point, like, you maybe would have said, "These vitamins don't work, it's expensive piss, yada, yada, yada," but it's a product that people use, and
Right.
as long as it's that and you're selling that, it's a multi-level marketing, and it's okay. Now you might have disagreements with that and how people are pushy and who's being targeted, but if it's selling a real product, that's multi-level marketing. It's not a pyramid scheme. A pyramid scheme is when someone sells you stuff that is vaporware. There's no product behind it.
Right.
And
Yeah.
so, yeah, in this case,
Mm.
you could argue, look, they're building a real product. They're going to deliver on that in February. If they never deliver a product, that's the issue that every crypto protocol faces, right? But this is a team that's actually like they're phenomenal builders, and so I that's where I predicated my thesis. Um, and you could see that in the work that they've done with Blur. Like, it's just a phenomenal product. And so again, um, you know, we can talk about issues with L2s and modular monolithic, like all that stuff is an interesting discussion that it's very relevant. And the construction of the L2 and the important things that one should look at when you're deciding whether to interact in an execution environment, like what are the things that matter the most, which means so that's like the more interesting nuanced discussion that should happen absolutely all the time, not just with Blast but like with Optimism, with Arbitrum, with every other L2, with other any L1, like. And I think people get kind of caught up in the drama and the noise, and
Yeah.
I'm happy to go through it now. I tweeted about this today, and the most important thing for an L2 in my opinion is like that you can verify and like validity and verification of an execution of a block. If you can't do that, run away. Like, it's an issue.
Well, let me ask you this then. Why didn't Blast just do the harder thing and wait? Like they basically deployed as an L like they're just a deposit with a multi-sig, right?
Correct. Yeah. That's
Um,
what it is at the moment.
yeah, it's just a deposit with a multi-sig. And the idea is like, hey, we're gonna obviously build this down the road.
Mhm.
Why did they actually just wait and deploy as an L2?
That's a great question. I mean, I think
Yeah.
it's again like they could have done that. I think I didn't directly ask the question,
Yeah.
but this is something we should definitely discuss when he comes on, Pac-Man.
Yeah.
My intuition is that you just sort of um, like a lot of projects do, you want to attract liquidity and lock it in from day one. You want to have all these kind of users,
Yeah. I have a
because that's
prediction.
really the most important thing. Like a lot of, if you look at other launches across ecosystems, like there's this idea of an incentivized test net and get all these builders. It, from a BD perspective, let me ask you a question. If you're, because now Blast has over 100 million in TVL deposits, they're there. So if you're working a BD at Blast and you go to teams and you say, "Hey guys, we're building this L2. We're the team from Blur. We have a lot of experience. Trust us, we're going to build it. Do you want to deploy on us?" They're like, "You know what? Call me when you actually launch and you have a test net, because we have the ability to do other stuff right now. You can go on." some of the other L2s. But now the discussion is much more, it's different when you say, "Hey guys, we have all this interest and it's there, and people are taking this and willing to lock up their capital because they're excited about who's behind it and who's building it. Do you want to come and build in tandem with how we like build this L2?" And I think that's really the more important thing is, you know, the worst thing is having a product that, from day one, like you bootstrap these networks, you want to have supply and demand, right? And a lot of that hinges on having stuff to do on the L2.
Yeah.
Like some of the more successful launches, like Arbitrum did it exceptionally well, where they just really did a great test
Mm.
net where they had a lot of developers open, any developer could come and build. Um, and I think now that's Blast is in an interesting situation where I think their ability, the bottom line is, I think the ability for them to attract builders, which is fundamental for this to be competitive and, actually,
Yeah.
be very differentiated, is the reason why I think they launched it in this manner where they opened a gate to have open interest and signal their intent to kind of interact in this L2. And look, we talk about like, you can stake ETH, you can stake stables, but also you can lock your Blur as well. And so season two
Yeah.
of Blur just ended, and a lot of people got the airdrop. Price action today, Blur's up like over 40%. And I think there's a lot of interest in people that are very active in Blur to now participate in this L2. And look, of course, it's incentivized. Like that's like the nature of crypto. You incentivize test nets, and you have incentivized, you know, and you have airdrops. Like, so anyone that's like, kind of critical of that, like, okay, well, you know, we are in a space of incentives, and you have to incentivize people to come over, and I don't see a problem with that. I think this is a very creative way of doing it. The narrative was not perfect for sure. The language was not perfect for sure. And that's, I think, something that could definitely be improved.
Yeah.
Like, it's
I
not
know
risk
you're, I
free.
know you're
Like,
really close with
all that.
them. Yeah, I know you're really close with the Arbitrum guys and like Steven and stuff.
Yeah. And Steven came out with great tweets. I mean, and
He did.
again, time and time again, he's been saying, guys, like, there are
I think his
issues.
point is you have to be very honest and have a
Yeah.
very open conversation about what is an L2 and what is actually secured by Ethereum. And
Like,
I think
like
so
we've look, I've had private discussions with Steven, and he's more open about it, but for a long time, he was like, imagine the frustration of a team that's been building since, quietly since the early days of Ethereum from, in Princeton. And no one kind of really knew Arbitrum. When I led the round, when I was a Parify and then private, like as personally invested, it was not very well known. It was like, why have you guys taken all these years to build this L2? Like, this was like 2015,
right.
2016. And the reality is, it's like incredibly difficult to get it all right, like to build fraud proofs, like, and okay, there are people take issues like, oh, your sequencer is not decentralized. Yeah, but you're an L2. Like, you don't need a decentralized sequencer to have like, decentralizing the sequencer is something that people like look at and say, oh, there's just one entity running the sequencing, but that doesn't compromise, like, th that has issues with censorship of transactions. But if you have fraud proofs, you can very clearly contest that and
Yeah.
go back to the L1 and settle that, right? Now, that's not the case for other L2s. Like, Optimism doesn't have fraud proofs. That's incredibly like, that's not an L2. Like, if you don't have fraud proofs, you're not an L2. Full stop. Like, and I don't know how else to say it.
But
Like,
then
people
why
get,
but then why like why is it okay to like why support Blast but not support Optimism?
well, because you're gonna build it.
Yeah.
Like, this is something that I will push all day long. If I don't see fraud proofs in L2, I just can't rally behind it. Now, they're in development, right? Um, I had other kind of concerns around, um, Blast, like, how scalable is this earning yield? What are the dependencies when you're earning yield? And there are some, right? You have to, but maybe long term this is really good, because if you just have, maybe that this allows for other, you know, validators, or like LSCs to gain more traction. If you
Yeah.
incentivize right? And pull away from a lot of the dominance of Lido. And maybe this attracts other, real world asset protocols to gain much more, like Ondo and some of these others
Yeah,
that are.
yeah.
So that I think is positive. Of course, the strategy has some capacity constraints of earning yield, or like maybe there's a degradation in yield because
Yeah.
again, a lot of this capital that is in L2s that is not earning any yield and has this constant trade off. Now you theoretically remove that trade off. You allow native yield in L2. Of course, that's an implication on the amount of ETH that is staked and where it's staked and where it's earning yield. And I think that's positive, but it also impacts, the aggregate yield of the network, right? Because if more ETH is being staked, well, then by default, the staking yield goes down, right? But then there's always this trade-off of
Mm.
at some point the native ETH yield goes to a point where the relative attractiveness is going farther out on the risk spectrum of buying treasuries through Maker or some other protocol that is facilitating that becomes better, but it becomes greater. And so naturally there's this kind of fluctuation in the risk-free rate, which is, again, I'm going to use that term to talk about the benchmark rate is probably the better terminology here. The benchmark rate is the ETH staking yield. And that's going to always be the opportunity cost that you're going to take relative to doing other stuff that is farther on the risk spectrum. Because theoretically, staking ETH is
Mm.
this that yield is like the lowest risk.
Let me
So
let me tell you why. Let me just tell you why this scares me, Santi, a little bit. Just I know I'm just to play devil's advocate
yeah,
here. The reason this scares me is because all right, so if you look at all the innovations with L2s, they've either been technical or like technical innovations, or like I guess I'd call them social innovations, or like industry focus innovations. So you could either add differentiators in the way that you're adding like fraud proofs or ZK tech or something like that, or you could focus on maybe a privacy first L2 or gaming first L2. And what this is doing, and I think the reason it got a lot of pushback, is this isn't saying, hey, we're going to build an L2 with better tech or with a focus on gaming or anything like that. We're making actually crypto economic adjustments instead of technical adjustments and social adjustments. We're making crypto economic adjustments. And I actually think Pacman's one of the best founders in all of crypto. And I think I think Blast specifically, like Blast itself, probably will be one of the most, I think, probably talked about L2s in 2024. However, what this does, and I think what this does is it forces all the other L2s to start making crypto economic tweaks and adjustments. And what that reminds me of is what ended up blowing up the 2021 cycle, which was you had like really legitimate lenders. Like take BlockFi. BlockFi was a really legitimate company, but they had to compete with someone like Celsius. And Celsius was not legitimate. And so they like Celsius started having these like essentially what we now know of were fake yields. They were artificially inflated yields. So you had like 9% yield on Celsius. And then if you're BlockFi, you're a venture backed company, you need to get more users. Your real yield should be like 3.5, let's call it. But you had to pull it
mhm.
up to 6.5 or 7.5%. And that ended up blowing up an
Yeah.
entire.
To be fair, that that risk-seeking behavior was, I think the issue was in this connectivity between TradFi applications and DeFi and the carry trade that a lot of people depositing institutions were doing. They were promising a particular yield to their customers, the BlockFi, Voyager, um, Gemini Earn, um, and who else? Like you name it. But let's just stop there.
Sure.
And the issue was that they didn't know their counterparty well enough. They didn't do enough uh, and due diligence, risk assessment and due diligence to understand where that yield was coming from. And as I will always say, and I think I coined this phrase, was if you don't understand where the yield's coming from, you are the yield. And I think they didn't properly understand where the yield was coming from. And they're earning to your point, they did get caught up in this competitiveness. And I want to, they're always looking at, oh, if Voyager is offering 4% on ETH, I need to offer 4.1. And then, at some point that music stops because there's
Right.
so much
But this is
capacity.
going to happen in L2s. Like L2s,
Well,
L2 competition was not that intense a year ago. Now it's super,
look,
now it's like
it's
the most
but it's a
competition.
different I agree. It's different type of I think the nuance here is like you understand where the yield's coming from in this case. Like it's all on chain. And
Yeah.
it cannot, it's all on chain in the sense of like, like if all of a sudden L2 is telling you there's going to give you 15% on your staked ETH, you're uh, like, no,
I don't think users care where their ETH is coming from is the problem.
the
In
yield
this
is coming from.
where their yield is coming from, and that's the problem. And it was the same
Yeah.
problem with like right now, the yield for Blast comes from ETH staking and treasuries. Like those are very legit and won't blow anything up. But in a super competitive, let's fast forward 18 months, ripping bull market, hundreds of
Mhm.
millions being pumped, billions being pumped into L2s and venture money. Um, L2 space is the most competitive space in all of crypto. The yield then goes from like, hey, we're offering 4% yield to, hey, we're offering 12% yield. And like 5% of that is real. It's coming from treasuries or staking. But the other
Yeah.
7% is made up of maybe they're yield farming with your ETH.
Mhm.
Maybe they're using venture dollars to fund it. And like
Yeah.
that's a
I think the
flagging the
important thing
scary
to
thing that
understand
I
right now is,
yeah,
yeah, they're earning, and the deposited ETH is being converted to STETH and potentially going to go through Maker as well.
yeah.
So
I'm not
yeah,
even
you're
talking
absolutely
about
right.
Blast,
You
by the way.
have to.
I'm talking about like
No,
what
no,
I'm
no.
scared of for the other L2s.
But it's going to be an issue for Blast, and will
Yeah,
be for any, like, even Maker, right? You have to understand where that yield comes from. And as a rule of thumb, if all of a sudden you're being promised a yield that is material from anything else you're doing, like if you're staking your ETH and Lido is giving you 4% and someone comes in and gives you 8, well, you need to pause there and like understand like what's the spread and where it's coming from. And maybe it's part of it is incentivized by the native L2 token, maybe whatever, right? And you have to have a view on that. But yeah, like naturally, anything that has a higher yield has higher risk, and you need
yeah,
to understand that the risk that you're taking. So I agree with you. Where I think is going to be interesting, and look, Maker went through this kind of existential crisis where the early Maker community was like super OG, very diehard in terms of principles. There was a contingent within the Maker community that was like, this is pre DeFi summer. There was just like, keep it pristine. DAI should be only collateralized by the most pristine asset, and that's Ethereum. Like, just
yeah,
don't introduce other types of collateral. But then you have a capacity, right, constraint. Um, as you think about like DAI and its stability and its growth, it was capped by the amount of ETH, right, and the market cap of ETH. And so, as soon as you start introducing other forms of collateral, you migrate to multi-collateral DAI, and you introduce USDC. Again, totally different type of collateral. Some of it is more censorship resistant than others. Some of it is riskier than others. I think where people miss the point is oftentimes, like so many times in this discussion when it comes to crypto, like people think of it in binary terms. Like decentralization is a spectrum. Um, censorship and lack thereof it's a spectrum. Like, and I think we need to think more like that to
yeah,
really understand the relative riskiness, obviously the absolute risk, but also the relative risk, and the rationale for introducing, like, our argument for proposing multi-collateral DAI as a tangent, but I'll be quick, is it's a matter of risk parameters and setting the right risk parameters. Um, because on one hand, if you just are backed by ETH, DAI is not going to go anywhere. The peg is probably going to like depeg, and the maker goes to zero because no one cares about this protocol. If you really want to grow and get more demand and get more loans and like CDPs open, like you have to allow people to like mint DAI with other collateral types that are important. People use, like, you might have a very strong opinion about USDC, but let me break it, folks. It is the most widely used stablecoin with Tether. There's always a choice. That's the point that I'm trying to make. There's always, the nice thing about crypto, there's always a choice of what you use. But when it comes to like protocol economics, I think, yeah, we're going to see more creativeness and like how this yield is being passed through over to users. Um, and we made a lot. There was a lot of mistakes were made, like in DeFi summer. Like again, there was like a lot of yield farming activity, but like you're depositing in a protocol, it's not delivering a product.
yeah,
Well, that yield is really not sustainable. Um, so you always have to think about that, right?
yeah.
Like treasuries, 5%. Is that sustainable? interest expense for the U.S. government is going to amount to 20% of GDP. Is that
Yeah.
sustainable? Like, I mean, we can go on this path, and again, it's like turtles all the way fucking down.
Yeah. I have one more question on Blast. It'll be fun to see how this plays out, and I'm excited to chat with Pac-Man on the pod.
Yeah.
What is it about Paradigm that I feel like a lot of these experiments on the fringes, whether it's
Mm,
Blast or Friend
Friend
Tech,
tech.
a lot of these, I think they did Blur.
Uh-huh.
What is it about Paradigm that like enables them to why are they behind what feels like most of these type of things in crypto? From what you know about Paradigm, we should have Matt and Fred and stuff on the pod, but what is it about them from maybe having worked with them over the years?
I think they're the best stacked team in crypto, like a fund in
You think
crypto.
so?
Of yeah, yeah, yeah. Like the proof isn't like look at what they did with Uniswap. I think that
Yeah.
was. I always thought that they were my biggest competitor when I was a Parify.
Mhm.
Now I like to invest with them.
Mhm.
But as when you're like, of course, Matt takes the Sequoia playbook, and a lot of these rounds, like he just cuts everyone out, right? It's like them and no one else.
Yeah,
Like
he
going
won't
to
less other folks
oh,
involved, right?
like standard in this case was an interesting one because I that was my biggest objection. I love what they do. I have immense respect. Like when you see the work that Giorgio's and Sam, which I wanted to hire a pair, like they have Sam, they have Giorgio's, they have Dan, like and a bunch of I spoke with another guy called Aaron. Like they have when people think about like if you're a founder and the amount of resources that you're going to get, I think they have the best, most diversified, competent
Hmm.
like researchers, and they may not be an A16Z that has like 100 like
Yeah,
team of operating and PR and all that. But I think when it comes to like really, really like getting deep into helping a project design crypto economic incentives, protocol design, and research and security, it's just like they have Sam. Like that's it. Like that's your secret nuclear like weapon.
yeah,
Like there's no better
yeah,
person in the ecosystem than Sam. Like
yeah,
he's the god. Like uh, he detects every bug. And so that alone, like, is just a reason why you would pick Paradigm over anyone else.
yeah.
Candidly, if I'm a founder, I would take their money over anyone else.
Who are the second and third best in your opinion?
Well, I'm biased, but uh,
Outside of Verify?
well, it depends what type of protocol you are, right? I think some funds
Yeah,
are
good point.
like Parify, obviously super. Like if you're DeFi,
Your
yeah,
DeFi Verify, yeah.
yeah. But there's other great funds. Like if you're in Asia, like obviously, Dragonfly and Folius. Folius is an exceptional work, like Step In and Scroll, and I think they're really plugged in. They do great research and really help their portfolio companies. But it depends on the stage too. It's
Yeah,
such a
yeah,
difficult question, right? But like categorically, I have an immense respect for Paradigm. Because they've contributed a lot to the space. Now, people may not like them. They might think that they're making investments they are questionable. I'll just say like uh, I'll just remind people because a lot of people think it's like oh like this is just a lot of people had very visceral and have very visceral reactions, especially when they
yeah,
don't participate in rounds, and then when they have and when the new income like when a new company comes in and is perhaps challenging the value of their bags. Look, it's okay. It's a normal reaction. I get it.
yeah,
But I would encourage people to take time to learn. And also, like, I'm just gonna say it, Solana for a long time was not very popular. People were very critical of it. And this was like not
the
even like
things that
12
are the
months
most
ago.
hated in crypto tend to, do pretty
Yeah, that's what I'm
well,
saying.
right?
And
So,
and now, of course, Solana is like all the rage. And for rightfully so. Like there's just a lot of stuff that had you been paying attention, you would have
yeah,
liked the team, you would have liked what they're doing. And I think the most important thing is like focus on founders and the team and their intent to build.
yeah,
And if how long they've been here, like God, I mean, the Solana team has been kicked in the nuts like time and time again, but they keep coming back and they keep
yeah,
improving the protocol. Like I look at that and I have an immense respect for these builders because building as Kane and every other builder that I've heard it from a lot of them, it's just like it's super difficult to build,
yeah,
especially in bear markets. Like you get crucified always, constantly. Things go right. People like,
yeah,
obviously, that's your job. People go like, but even when things are going right, people like have opinions of like, oh,
Yeah. Yeah.
all of a sudden this community model, like folks, not because just because you have a token doesn't mean you can all of a sudden barge into board meetings or whatever, or like,
Right.
like no,
Yeah.
like absolutely not. Stay away.
All right. Last piece of news from this week that I
Yes.
think is my
Coindesk.
computer's about to die. There was Pith, but we'll have Mike on from Pith to talk about Pith, so we can do a separate pod on that. Kraken got sued by the SEC, but Binance was the bigger news. CoinDesk got acquired. So CoinDesk, and I actually I'm so biased about this that I'd love to hear your take on if I'm overreacting or not. But the reason I posted this Twitter thread about it. Let me give the story. So basically, when DCG had problems with their balance sheet because of Genesis, Barry put a couple of uh, DCG owned companies on the market, and one of them was Coindesk, and they ended up they in July they had an acquisition or a deal with this guy Matt Rozak to buy the company for 125 million. As the market kind of stayed flat and actually fell in the end of the summer and like early fall, Rozak pulled out, and that deal went back on the market. And this company Bullish ended up just buying them. It got announced this week on Monday that this company Bullish is buying CoinDesk. And I posted this Twitter thread, which was kind of not classy, I would say, but I just wanted to kind of call out my thoughts on it. So I think it's pretty
Can you
bad for
can you
the
show it now? How
yeah,
difficult?
I'll just read it. I'll just reread it. I said the CoinDesk Bullish acquisition is bad for the industry. For first off, Bullish is owned by Block One. So for those who don't remember, Block One created the EOS blockchain. It was supposed to be a faster Ethereum, right? It was part of that original group of ETH competitors who raised during the ICO era. And in May, I'm sure you remember this, Santi. In May 2018, EOS raised $4 billion in the largest ICO ever. And
They're
what
now
they
the largest, one of the largest Bitcoin holders, by the way.
they took that 4 billion, they let it ride in Bitcoin. They're now one of the largest Bitcoin holders in the world. They own more than MicroStrategy. And in
A lot
July,
more.
what?
A lot more, yeah.
Yeah, they own more Bitcoin than MicroStrategy. And in July 2021, so they've been launching new companies. They bought a domain name for $30 million, actually from MicroStrategy and from Sailor, called voice.com, put 150 million bucks in that company, killed it a year later. July 2021, Block One launched a new crypto exchange called Bullish with 10 billion in funding. That is billion with a B.
Wait, what?
Yeah, crypto exchange called Bullish with 10 billion in funding. It was backed by folks like Peter Thiel, Louis Bacon, Richard Lee, Novogratz, Christian Angermeyer. And today, Bullish announced that they're buying CoinDesk. And the reason I think it's so for us as Blockworks, as someone who competes against them, amazing news for us. Like we love to see that. But as someone who loves crypto and genuinely believes that we need, like now more than ever, we need unbiased media to move the industry forward in a responsible way. This is not good. This is no different than Binance buying CoinDesk or or Nasdaq buying the Wall Street Journal or BlackRock buying Bloomberg. It crushes, I think, the editorial integrity of the brand. And the reason this kind of hit a nerve with me was this comes a couple days after Foresight Ventures, who owns BitGet, also another crypto exchange, bought the block. And I
Block
would consider
80% of the block, but yeah.
bought 80% of the block. And I would
Controlling the stake.
consider if you look like I think the three best media companies today in crypto are probably CoinDesk, Blockworks, and the Block. I would put those as like the kind of trifecta of crypto media. And it's a bummer to have two of
But like,
those three owned by crypto exchanges.
I hear you loud and clear. Now, let me ask you a question. We've also seen a host of billionaires like Jeff Bezos of the world go out and buy, like the Washington Post, I think he bought. And like, look, there's a reason you could try to, when people buy, news outlets or obviously presents a conflict of interest because Bezos has an interest. Like the people that are behind it in the board obviously have stakes in companies, they have interests in other things. In this case, I think your point is a very good one, which is obviously there's bias, but there's always bias. It's how much bias is too much bias.
Hmm.
And do you have the proper controls in place to preserve the integrity of the journalists that are reporting? And how involved are you in what gets pushed and what makes a story and what doesn't make a story. I think that's the issue. That was the issue with Block, right? The Block, one of the former, I think it was a president that got ousted, was CEO. He took loans from SBF, and well, he didn't disclose that. And I think it's a matter of just proper disclosure of conflict of interest. Like, look, you've done. It's like I'm in this podcast. I have an opinion on things. I have a lot of investments in the space. It's no surprise. When I talk about Coinbase, I'm long coin. When I'm talking about Blur and Blast, I have exposure to that. Of course, it'd be stupid and disingenuous for me, one, to not disclose it, and two, to not appreciate that, like, it's not going to influence my opinion. And I hope listeners appreciate that. I think when it comes to, like, I'm just a guy that sits in a chair to talk about and ramble on shit. It's different if, like, I'm an investor in Blockworks too, but it's a very minor stake. I don't go to you and say, "Hey, you need to publish this now." Like, but, like, what's the worst case scenario in your mind? Like, they just skew, they all of a sudden now start, like, pumping EOS bags, and I don't know, like, what's the issue? 'Cause what I'm saying is there's always a
You're right.
conflict of interest.
Billionaires
You buy
buying media
influence.
companies
You
is
try
that,
to own the
John
narrative.
Henry, right? John Henry, the Boston Globe, Bezos, the Post, Glenn Taylor, right? The Star Tribune, the Sheldon Adelson, the Las Vegas. He bought the Las Vegas Review secretly after they were covering him negatively, and he bought it. Like the list goes on and on. Mark Benioff, Time,
Uh,
um,
Musk buys Twitter.
the Thai billionaire guy, Chot. I don't know how you
Yep.
pronounce his name, but he bought Fortune. Like the list goes on and on. The difference there, I think, is that they're not buying companies in industries where they necessarily operate. So, like it's different to buy like someone like the Wall Street Journal, where you or maybe the New York Times or something, where you're covering everything. We are B2B media companies. We are like trade publications essentially, where the only thing that we do is cover crypto. So every single day, CoinDesk is either making a decision to cover Bullish or not to cover them, and they're making a decision to on how to cover a crypto any crypto exchange, which are all Bullish's competitors. So I think Barry did a phenomenal job with this. Like Barry actually did well early on, maybe not as much, but later in the last couple of years, Barry did a great job with CoinDesk. They had very good like ethics and policies and real church and state, and he genuinely believed that good media is good for the industry, and what's good for the industry ends up in improving his company. I don't see this as that type of acquisition.
Yeah.
I don't think the Brendan Bloomer of EOS is like, what's good for media is good for the industry, and what's good for the industry is good for Block One. Like this
Yeah.
feels like a.
Yeah, absolutely. No, I hear your point. I'm just kind of like, I'm raising a point where,
I'm
like,
su-
hey,
I'm as biased as you can get with this. I actually wanted to hear
yeah, yeah.
another opinion.
No, like, I think it's a very valid concern. I think, look, at the end of the day, you have to think about, okay, the aggregate purchase price of this is probably de minimis relative to their Bitcoin holdings. And so the question is, if you're a venture fund investing in and buying a controlling stake in a media publication, are you going to lit, money on fire? Because at the end of the day, like, if you're reporting really poorly, I think the chance, like, your investment is going to probably go to zero in the long term, right?
Right.
If you're a shitty media, you know what I mean? Like, if your integrity is compromised, if you're so biased, like, people going to wake up to that, and I think you're just going to dominate. It's maybe a great position for you guys to just plow ahead and be the most independent. There's always some bias, but independent um, media outlet for crypto, and then you just win that game because I'm a big believer. At the end of the day, truth prevails, and people appreciate good editorial content. Like, um, it is obviously more sensitive. Like, the ability to influence narratives is um, probably easier in crypto, of course, right? Because it's an emerging asset class. You know, we're also, by the way, facing challenges when the New York Times and traditional media, like, also carry a narrative and portray this industry to make headlines that time and time again they've obviously not portrayed him, in the most favorable way, right? Like, over the last 12 months, like, over the history of crypto, it's always been the negative headlines. Negative headlines sell more
Right.
than positive headlines, and that's always been the more like demoralizing piece of media because the monetization model is clicks and views and like that just sucks, right? And
Yeah.
I think this is why when I interviewed you um and Mipo Mike with Vance, I think it was Vance or Michael. It was really this opportunity I think that you guys have to embed a lot of like a different monetization model where you don't have to you rely on clicks and sensationalism to make a living, like, and to make it a profitable enterprise. I think you can really
Yeah.
embed NFTs. You can have greater ownership. You can like, there's just a lot of things that with micropayments, I think you can roll out more interesting creative subscription models. I don't know, right? But
Yeah. Yeah.
that was my. I think that's the opportunity you guys have. And if all of these new, if the block and CoinDesk are going to fade into irrelevance because they don't have proper independence, as you say, between the board and the owners and the journalists, that's going to show up and they're going to go to
Yeah.
zero because over time, these things take care of themselves. You don't have to do anything. Like, if they're so willing to become a very biased media outlet, well, guess what? I'm not going to read it. And then over time, people are not going to read it. Right. So they're just their market share and their mind share in the space goes to zero. I think the real problem is the New York Times of the world. That I think is a bigger problem.
Mm.
Especially at a time where you're going to have an ETF approval. You know, Bloomberg has a segment every day, an hour segment of Bloomberg Crypto that may or may not continue to exist. But that's just been incredible to see, right? I mean, what I'm trying to say is there's growing interest for people to learn about this space. It's the only reason why I show up and sit on this chair because I was just frustrated with
Yeah.
people, the pomps of the world. It's just like, God damn it, if that's your first interaction w- in this space, like no wonder we haven't gotten mainstream adoption. I don't care how good the product is. If people come in here and the first thing that you see are pop-up ads and buy this like token, like no, let's approach this from first principles and have an honest discussion and a balanced one. Like we tend to overpromise. Like guys, like tone it down a bit. Like this tech is really good. Like we're here, our bags are packed, our net worth is tied to that's like we're putting ourselves in line, but that doesn't give you like I think it's not a good strategy to go out and say and sell and pump your bags. Like, no, like
Yeah.
let's be objective and police ourselves. And look, I think this is again just to tie it out. When I see the Coinbase team and their discussion and the way that like Brian goes on TV, like that's I think that's a good like if I were to pick a marketing person for our industry, like it's not Sailor. It's probably someone like Brian. He's not perfect, but he
Yeah.
gets us closer to someone that just like. So, anyways, I think it's encouraging for you guys. It's motivating for me because, yeah, like the challenge is, I think everyone here, if you have an audience, no matter how big, I think you have a responsibility to stay balanced and vigilant, and push like as pristine of education as you can. Raise awareness. I mean, yeah, everyone has a bias. I have a bias, of course, on my
Yeah.
portfolio, of course.
Yeah.
It's
So,
impossible to eliminate. Like this, it's just who we are. It's just by nature of being an investor. But
yeah. Good pod,
anyways,
man. My
I
computer's
ran.
on 2%, so
Is
I'm
it all right? Well,
officially
that does
dropping
that
back.
mean that you're going to shut down for the rest of Thanksgiving?
I'm taking the
Anyways,
rest of the
super
year
thank.
off.
If you celebrate Thanksgiving, I think it's the best holiday. It's my favorite holiday. I'll be celebrating. I sure as know Yano and our producer is also going to do it. So, anyways, for everyone that's been listening, thank you for listening. It's very encouraging when we hear the good and the bad, and what people like and don't like. So, really, thank you, everyone. It's one of the more fun things that I do on a
Likewise.
weekly basis.
Enjoy your Thanksgiving, folks. See you next week.
Friday.
Hey everyone, thank you so much for watching today's episode. Really hope you enjoyed it. We wanted to take a second to just remind you about our upcoming Digital Asset Summit in London, March 18th to 20th. Santi and I got your back. Seats are limited, and we hooked you up with a 20% off discount code. It is Empire20. If you heard it earlier in the podcast, there's a little competition running at Blockworks to see who can drive the most number of tickets. So when you register for the Digital Asset Summit, make sure you use our code Empire20. See you in London.